Hello friends, welcome back to my discussion on Indian economy. Today we are going to discuss one very important issue that has been boggling our policymakers since quite some time, and they are totally confused what to do. And that's very genuine confusion because the issue involved is actually handling the cryptocurrency and what policy options should be taken to properly enable our people to use cryptocurrency and also control it. So why it is so important, let's talk about that. So if you remember, recently our finance minister said that they are seriously thinking about cryptocurrencies as an option. So let's see what is involved in there. If you remember, at least one country has declared Bitcoin and cryptocurrencies at their official currency. So one thing that we should always remember, that Bitcoin or something is not to be made an official currency in India, an economy of the size of India, because it's very difficult to control. So let's see what are the nuances involved in here. So we will talk about what makes actually cryptocurrency so special. So one thing that makes it very special is this, that unlike any other currency, coin, note, you cannot actually touch it. You cannot put it in your purse. You can keep in digital wallet, but you cannot stuff it under mattress or anything else. And most importantly, unlike our currencies, coins, it is not minted in any real mint or government printing press. It is actually minted in CPUs and mainly GPUs, that graphic processing units of computers, which keep on crunching data. And what is that data? It's actually very complex mathematical problems that they try to solve. And the first one to solve the problem will be given one Bitcoin. So this is generated in that mathematical process. So now this makes very difficult. What should actually the government control? Mathematical problems or what? Computers. So this is one very serious problem involved in here, that it's abstract, totally abstract. Second thing that's actually very dangerous about cryptocurrencies is this, that these are extremely volatile. If I remember correctly, 1 year back, Bitcoin, the king of the cryptocurrencies, Bitcoin was trading somewhere around 30,000 US dollars per Bitcoin. In May this year, it actually rose to US dollar 56,000 something. And then there was one tweet by Elon Musk, and the cryptocurrency, especially Bitcoin prices, fell down by 6,000. If I remember correctly, 6,000 or 7,000 US dollar overnight, and then it was going down like anything. So millions and billions of rupees were wiped out instantly. So now this kind of volatility no economy can actually handle. It's not possible for any central bank of any economy to handle this kind of volatility. So this is one main issue involved here. Now let's see that what our policymakers should see as main issues involved with the cryptocurrencies. So one thing we should be very clear before we proceed further, that cryptocurrencies are not to be made at all a government fiat currency. No, they cannot be a medium of exchange. No, what they should be actually as a store of value. Anything that works as money should have four functions. One is it should be a measure of value. Second, it should be a medium of value. Third, it should be a store of value, and it should be a medium of exchange. So in Bitcoin and other cryptocurrencies, the best option involved is using them as a store of value. That is the asset value, asset feature of any money. So government also correctly thought that they should actually declare these cryptocurrencies an asset class. So what we are going to discuss further is actually discussing with the viewpoint that cryptocurrencies should be declared an asset class and not at all as a legal tender. No. So the first issue that is involved, and actually nobody talks about this, and the reason why Bitcoin started falling was that Elon Musk pointed towards this. I don't know his intentions, but then this is one serious problem, that the data mining rigs where people mine Bitcoins, they run say hundreds of GPUs and very strong CPUs 24/7, and they generate a lot of heat. Then you have to put cooling system for that. All this actually involves a lot of energy consumption. Recently there was a study by Cambridge University and they said they showed that the amount of energy being consumed in Bitcoin mining is equivalent to the energy consumed by Argentina itself. So if we make Bitcoin a country, then it's the third largest energy gobbler after US and China. So that's really interesting thing. And just the issue that it's using energy is not actually that much problemsome. What is more problemsome is this, that the price that these miners are paying for this energy that they are gobbling up is actually much less than its social cost. So in economics we say that there can be a difference into social cost and private cost, and this issue comes when we have a problem of externality. Externality means there are two parties to transaction, they are gaining or losing with that transaction, but there is a third party who is not directly involved in this transaction, but then they are being affected by this particular transaction that is taking place. A typical example can be someone who is playing say GTA 5 on their PlayStation very loudly, and you are in next room, you are getting headache out of that noise. So that person will say, I paid up for GTA 5, I paid up for my PlayStation, I am paying for the electricity, why should you bother? But then you are bothered because you are getting a headache out of that. So you are facing a negative externality. So that is the issue here also. So the miners will be mining till the benefit that they are receiving shown by this line downward sloping, and the marginal cost they are paying for mining activity shown by this upward sloping line, they are actually equal. So this will be their equilibrium, right? But the society is actually being affected very adversely. So we are having one particular curve that will be going from here, and this is the marginal damage that we are causing to the society. So for the social marginal cost, we have to add these two vertically. So actually the cost involved is this marginal social cost. And if we see that if we make the miner pay this actual cost, then he will be producing much less. His mining activity will actually decrease to this amount. So see the energy bill that these miners are paying, mostly domestic bills, if they are paying the bills at all. Otherwise they will just hook into some electricity line and then they will start using that. We often hear news that police raided, not in India of course, police raided some mining rig that was drawing electricity from grid illegally. So that's a very big issue. So we have to think about this. Another major issue that comes with cryptocurrencies is this, their life can be very ephemeral. So when I was writing this article somewhere in the end of August, at that time there is a website that is called coinopsy.com. It actually tracks all the dead coins, and so the number of these dead coins was 2195. And what is a dead coin? A dead coin is something that's now totally illiquid. Nobody is there to buy or sell it. Nobody is going to buy from you. So what happens that you purchase some new coin that was very cheap, coming for say 1 rupee a unit. You thought, oh my god, what I'm going to lose, so let's purchase 10,000 of these. So you invested 10,000 rupees in that particular coin, let's call it X, and then you realize that this was some kind of a scam. After 1 month, this coin X actually it's not being traded at all. So you are having that dead coin with you. And why this issue of dead coin comes? Because right now there is no regulatory framework for starting a new coin. Anyone with new formulae can actually come up with a new coin, and that is happening. If you see the list of the coins, my god, so many cryptocurrencies. So that's another problem. Another issue that's actually very serious, that is the possibility of money laundering with current system. So there are a lot of exchanges where they allow peer-to-peer transaction. Now from peer-to-peer transaction, you don't know who exchange doesn't have any record. So you have a buyer that you have found, so you are selling your coins to them, they are paying you directly. So this is dangerous. Money laundering and the black money that can be actually laundered using this. Another issue that actually I have seen in cryptocurrencies is this, that for a single coin there will be different rate in different exchanges. So there are many exchanges, Binance, WazirX, I'm talking about India and some of the global exchanges. So all these exchanges will have different rates for same cryptocurrency. The same Bitcoin that is trading for say $30,000 per unit at one exchange will be trading at say $30,500 something another exchange. Why this is happening? This is happening due to differential demand and supply conditions in these exchanges. The exchange which are very liquid, where we have a lot of buyers and sellers, they will be having slightly different prices. Exchange where the buyers and sellers are slightly limited, that will be having different prices. So this is another issue involved here. So by now you must have realized that actually what are the issues involved in the cryptocurrencies. So let's talk about that. What are some policy options that the government should have actually? So seriously think about. So first is this, that the government actually create regulated exchanges. Now how will they do this? Suppose that right now we have WazirX, CoinDCX, we have Binance. Sorry, my handwriting is like hieroglyph. So now these are different exchanges. People are buying and selling, and government doesn't have any record of what is happening in these exchanges. What actually government should do? Convert one regulated exchange where all these existing exchanges actually become brokers. So this will be something like our NSE and BSE, where we have brokers for stocks. Now all these exchanges, they are now brokers. First thing, so every transaction will actually pass through that particular exchange that we are creating. Now these brokers will be required to keep a record of all the transactions that individuals are doing with them, through them actually. So we will have at one place all the transaction record. This can be shared directly with IT department, income tax department, or it can be shared with the individuals, or it can be shared to both, so that everybody knows that what profit they have made and how much tax liability is on there. Okay, so this should be done. Another important benefit that will be emanating from this creating regulated exchange is that like what happens in stock market, that whenever a new IPO is going to come, investment banks actually evaluate those IPOs. Similarly here, whenever a new coin is to be floated, the exchange, the regulatory authority will actually do a thorough background check, and this will reduce the possibility, not eliminate altogether, but it will reduce the possibility of dead coins coming up, that people are losing their money, these scams of dead coin, that will be eliminated. Another very important thing that will happen after creating regulated exchange is this. Now, because all these erstwhile exchanges will become brokers and there will be one exchange for all the cryptocurrencies, the price of one cryptocurrency will be uniform across all the brokers. So suppose you want to buy Bitcoin. So Bitcoin is available at one particular price. It's not available at 10 different prices with 10 different exchanges as it is practiced today. So that will be very useful for the buyers, investors who are actually investing in that. Another benefit of this will be that it will rule out peer-to-peer transaction, and every transaction will have record. So government can track money laundering and black money changing hands. A very simple suggestion can be that every individual have to maintain one account through which they will be doing transactions with the exchange or brokers, and then government just have to track that particular account's transaction. And that can be done very easily like we do with our stock market transactions. So there is nothing rocket science here. Now another very important thing is this, that government must start regulating and monitoring crypto mining activities. Because of the issue that I mentioned here of difference in the price that the miner is paying and the price that society is paying for that mining activity. When you are taking away energy from the economy, then actually you are impinging upon some other important activity that could have been done through that electricity that you are using. So they should pay the actual price that they are supposed to pay, the social cost. And it will be many times higher than the domestic rate that they are paying and enjoying abnormal profits. And mind my words, as we proceed and government start thinking about making bitcoins and other cryptocurrencies legal, mining activities will skyrocket overnight. And then what I am talking about, this energy issue, this will be a very, very serious problem to tackle. So government may think of giving them some tax rebate or some incentives in terms of that. Okay, you install your own non-conventional energy farm and use that energy to mine cryptocurrency. So these options are available there. Now another very important policy discussion is about the taxation of cryptocurrencies, and this is actually like grabbing the bull by the horn. So how to do this? Again, I have actually a very simple suggestion. So there could be two options. One, government makes it mandatory for all the brokers that we are going to create in this regulated exchange for keeping all the records of all transactions by all individuals registered with them. And because these cryptocurrencies, they are treated 24/7 and all every time they are running, so it's going to be a huge record. So ultimately at the end of the day, every individual will know, okay, this is the net transaction I have done. I have bought these many, I have sold these many. So we will have a record and government can tax accordingly. Another actually an easier policy option is this, because we are asking every individual to register with one bank account with every broker. So we just need to track the net withdrawals from that account that is coming to that account. So suppose that one individual actually have 1000 rupee in the SBI account that he is using to trade in cryptocurrency, and he invested that 1000 in some currency XYZ, and after some time he actually sold that for say 2000 rupee, and he brought that 2000 rupee back into account. Once he sells, the 2000 will come back. So government just need to tax the net money that is there. So it is 2000 that return and 1000 that is there. So net withdrawal is actually 1000 rupee that the government can tax. This is a very simplified example, but I think it serves the purpose. there could be another possibility that the person actually doesn't withdraw this money and he reinvests this into some other cryptocurrency. Then don't tax it. Ultimately, one day he is going to sell all and bring the cryptocurrencies out, money out. Tax them. Regarding the tax rate, you can keep it actually very high, because the kind of profit people are making here is abnormal, and so should be the tax rate. Because government is also doing a lot when they are creating a regulated exchange and monitoring all the transactions and everything. So nobody should actually object to these tax rates. And believe me, the kind of profit people make overnight in cryptocurrency, the revenue from this source will be so much that it might solve actually a lot of worries about the tax revenue of our government, and possibly then we can put our petroleum and diesel under GST and reduce the prices. So that will be a win-win situation for everyone, right? So these are a couple of options available, and actually it should be an open discussion with the public. Government should bring a white paper and it should be debated in public that how we should proceed with this, because right now this is something new. People have not seen this, world has not seen something like this couple of years back. So we have to be very innovative in handling these things, and our central banks is at its wits end. They don't know what to do with this. So if I remember couple of years back, they said that cryptocurrencies are not legal and you cannot trade that, but if you have traded that, you have to pay tax on that. So I have a simple query: how can you tax something that is not legal? You put actually a penalty on that, right? You put a penalty that how did you actually trade it in something that is not legal? So that gives one indication that people are totally confused what to do with this. But believe me, whenever anything new comes, many people don't understand what is that, and whatever we don't understand, we actually fear that. This happens with individuals also. When people don't understand you, they will either shun you, they will fear you, or they will just avoid you. So same is with the cryptocurrency also. So don't worry about avoiding this. You can embrace this and make profits, but you have to be very cautious. And you have to come to this field with an open mind. So that's it for today. So let me know, did you like this talk about cryptocurrencies? And you can go to the particular newspaper and read my article if you want. There will be a couple of things that I may have missed discussing in this particular video. So thank you for watching, and bye.